Hello, good evening, friends. Thanks again for attending this session today. Uh, Myself, Chitla Thakur, and I take care as Chief Business Officer for FundBezzie as a platform. And let me again welcome the entire team for this financial year. I can say the last product for this financial year or the first product for the upcoming financial year. So we were very selective. क्या करना है, क्या launch करना है. After a lot of doodle, after a lot of learning from the team, from our channel partners, we thought to have a product where the excitement lights as on time today into the market. Specifically something from the energy segment, NCD as a product from energy segment, and specifically Asset Monk as a platform who has always been a close associate with us from day one. So specifically, I'm not wasting more time. I'm immediately handovering the call to Upendra Kinal, giving a background of Upendra again. Upendra being a close friend of mine, close friend of mine plus a close friend of the platform, we can say FundBezzie as a group together. Always being a well-wisher, making a know कि platform क्या जा रहा है, कौन सा product करना चाहिए, industry किस तरह से जा रहा है. Giving a background of Upen, almost a financial expert into the industry for last almost 2 decades, almost 20 years plus. Have been working with the top associates, top companies like Ask, Kotak, MetLife, DSP. So almost top one from the industry, understand the industry very closely. He started working with Asset Monk when the platform had just started around. Currently, he's working as sales director with Asset Monk, coming up with new products on the NCD front, specifically when we say secured NCDs. So that is how we are coming up. So Upendra, I'm not taking much more time, just handing over the call to you. Yeah.
Sure. Thank you, Sitlaji, and thank you, the team of Pantomath and FundBezzie for giving us a platform to talk to each and every of your panel members. And I would also want to extend my courtesies and thanks to each and everyone who has joined in today in the afternoon. So I wouldn't take too much of your time in introducing myself. Thanks to Sitlaji, he has already done that. So what I'll do is I'll take you through the presentation, what we have in store, and I'll be happy to answer any questions at the end of the presentation per se. Let me just share it. Screen is visible, sir?
Yeah, Upe.
Great. So as the name speaks, we were talking of a product called Spark. Now, as the name suggests, this is more related to EV as a sector per se. What I'll do is over the course of next 30 to 40 minutes, I would not want to talk too much and bore you with a lot of data as well. Over the course of 30 to 40 minutes, I'll take you through what this product is all about. How does the cash flow look? What is the structure of this NCD? What kind of risk analysis we have done? And typically about why alternative investments. I would want to spend more time, a bit more time on what is alternative investments and why EV as a sector per se, because this is something which has come out very new, and this is something which is very, it's more like a sunrise in the industry, which is looking very promising, not only for being to create a green earth per se, but also in the form of investments. So when it comes to investments, especially when it comes to EV, or you talk of global warming per se. So the concept of EV predominantly came a decade or so ago, when we talk of global warming per se, and at least for most of us, if not all, global warming is something which we remember during specifically during 2 months. One is during summer and one is during rainy, right? अभी बहुत धूप है और बारिश हुआ नहीं या बारिश बहुत ज्यादा हो रहा है and things like that, where there is a lot of things which have changed environmentally and in terms of climate. So that's where people do remember about climate change per se. But then the government across the globe have understood that this is a real problem what we have on hand, and which needs to be dealt with an iron hand per se. And with this, India is looking at being a carbon neutral by say year 2030, and at least 40 to 45% carbon neutral by the year 2030, which is just 6 years down the lane. So there are a lot of things that Government of India is also doing, including PLI schemes and things like that, for this industry to develop rapidly per se, right? So with this as a background, we have launched a Spark series per se, which assures you and your investor a 12% per annum fixed yield, right? So how does this 12% per annum fixed yield work? We pay 9% per annum on a monthly basis. We pay 9% per annum on a monthly basis, which is 0.75% on a monthly basis for 3 years over the course of the product. And at the end of the term, we pay an additional 3%, which works out to 12% per annum. So this 12% is something which is fixed. Now, we also wanted our investors and our channel partners to actually ride through this sunrise industry. And that's where we negotiated with the borrower per se, and where we have ensured that at least 20% of the revenue, whatever he is generating, will also get added to the yield to our investors per se. So what this basically means, if the business where for what he is borrowing does not do well, 12% is something which is assured. But if the business does even as per what he's projecting per se, we are talking of 12% assured plus additional as high as 6%, which works out to 18% per annum. So I'll talk to you a bit more, in one of the couple of slides later on. And that's the reason why you see a targeted yield of 18%. We also have tried to sweeten the deal where these revenue, we talk of revenue sharing, the returns can go as high as 21%, but the assured rate of return is something which is 12%. The tenure of the product is 39 months. It is actually 36 months, extendable by 3 months. So works out to 39 months. The minimum investment as per this slide is 2 lakh rupees. But then what again we have done, one of a kind again in the field of investments. For since this is the month of March, again, Women's Day month. So what we have done is minimum investment of 2 lakhs for female investors and minimum investment of 5 lakhs for male investors is what we have done for this product per se. The coupon of 9% per annum is paid on a monthly basis, which works out to 0.75%. Again, as a security, we have a reputed trustee, which is IDBI trustee, who manages the whole show, ensures that the investors are getting their money on time, their coupon on time. And just in case, God forbid, there is a default, the security is taken over by the trustee, sold by the trustee, auctioned by the trustee, and the trustee ensures that the investors' money goes back to the investors' money without any without any issues per se. So this is the basic way in which the product works. 12% fixed, 9 plus 3%. We are targeting a yield of 18%. Now we'll also, in one of the slides, I'll show you why 18% is something which is achievable, and the tenure of 39 months per se. Now, this is the sample cash flow, what we have created for our investors. So the one with the light blue dots, where so this is a sample size for our investment of 2 lakh rupees, where quarterly it works out to around 4,500 rupees. We have made it on a quarterly basis because if I add data points on a monthly basis, the whole screen, even the whole screen might fall short per se. To make it but more readable and understandable, we have tried to concise it on a quarterly basis. So quarterly for a 2 lakh investment works to around 4,500. Now that is something what you see as a straight line. Now this 4,500 is something which is assured to our investors on a quarterly basis, paid on a monthly basis. 1,500 rupees per quarter per se is something which is assured to our investors. Now, as we discussed earlier, now the company also will give up to 20% of their gross revenues on a monthly basis to our investors, or 9% of the interest, whichever is higher. Now, what we are seeing is this company, which is Voltran, we'll talk about the company in the later slides, is planning to put EV charging stations across the highways, and what the revenues what are being generated over a period of time. Now, if the revenue of 20%, let's assume they make 100 rupees overall revenue, 20% of it, which is 20 rupees. So you see 20 rupees, and quarterly, what is the money which has to go? Say 4,500 rupees. So 20 rupees, 4,500 rupees, whichever is higher goes to the investor on a monthly basis. So that is how basically the product has been designed. And that is the reason you see that the lighter blue line, lighter blue dots, which is the revenue share, obviously, since they are setting up the whole, the EV charging stations now, they need at least 6 to 7 months to marginalize and stabilize the business per se. And we foresee that, with the current projections, with the current business projections, the clients should look at least around 17 to 18% kind of a returns to be made over 36 to 39 months per se. Now, the maximum cap what we have kept, and that's what you will see, the revenue line is getting capped, is maximum 21%, which means the higher revenue the developer or the borrower makes, the more beneficial it is for him. So that's how we have designed this product, where higher revenue he makes, he has to give maximum only 21%, not more than that. Anything less than that is something 12%, which is assured, or 20% of the revenue, whichever is higher. So looking at our sensitivity analysis, conservative, which is the 12% what we are talking about in terms of things going bad. Ideally, what we are looking at, the current kind of projections, and for the EV market per se, we are looking at creating 18% kind of a return for our investors. And if the things actually develop on an aggressive basis, we are looking at between 20 to 21% kind of a return to our investors over a span of 36 to 39 months per se. Now, this is the structure. Now, so what we are doing over here is, we pool in this money to the investors. The agreement, the borrowing and the lending agreement is directly with the company per se, which is raising this money, which is Voltran. So the company raises this money, company issues the NCD through Asset Monk per se, and then installs around, they are looking at installing around 6 to 7 EV charging stations per se. I'll also show you the location in the later slides. And then once the revenue starts coming in, that revenue starts getting replowed back to the investors on a monthly basis. Till the time that happens, the company is paying around 9% per annum, which works out to 0.75% on a monthly basis. Now, in between this, there is a SEBI registered trustee, which is IDBI. And as you already know, and for people who have dealt with Asset Monk, all our NCDs comes with security per se. For every 1 rupee or every 100 rupees what a borrower is borrowing, the borrower gives 150 rupees worth security with us. In this case, it is a piece of real estate, which is given as security. And this security is mortgaged to IDBI trustee. So just in case there is a default on coupon or on the principal or both, then the trustee gives a 90-day notice to the developer or the borrower. And then on the 91st day goes for auctioning the security. And then the money what is coming out of the auction goes back to the investor, covering his principal and to and his or her interest per se. Along with this, we also give all our clients get a tracking dashboard, which reduces a lot of stress on our channel partners per se, because a lot of the clients will need the receipts for their money what they're receiving and things like that, specifically during year end or quarter end, as the case may be. So all this are available on the web, on the dashboard what we have created, which will reduce the stress for our channel partners also. Now, this is the risk analysis what we have done. Even though this is around 6 or 7 points what you look at, back end, we are looking at almost around 60 to 80 checkpoint list per se. So that has been consolidated into 6 or 7 points, and then we have rated these risks accordingly. Now, as you can see, the rating meter maximum is 60, but this risk rating of the product only comes to around 15, which falls under the mild risk as a category. So which means for the client is taking a very mild risk for the kind of returns where 12% is something which is assured, can go up to 18% is something what the clients could look at over the next 36 to 39 months per se. Now, this is more about the product. Now, let's also try and find about why take alternative routes. And it's pretty interesting, specifically on a day when the stock market rallied close to around 1,000 points on Sensex. Now, you will see a lot of clients saying that I'm making a lot of money in the stock market. Many of your clients would have exposure to small caps and mid caps. For the last 1 year or so, barring last 2 or 3 months, they've made fantastic returns. So they may think that why should I invest in a product which will give me 12%? But then fortunately or unfortunately, what you might have also seen and which has been true, that a small cap or a mid cap which gave a high double-digit return also fell very sharply over the last couple of months because of either SEBI coming in or an RBI coming in or an AMFI coming in or whole host of reasons. This is something which was not which was totally unforeseen and unprecedented per se. But whatever be the reason, we saw that the markets cracked down. So whenever you see a crackdown, that is when the clients tend to be a bit more jittery. Whether should I keep investing or should I take the money? And that's when a lot of questions are asked about you also, as in what kind of financial advice were you giving me when you're seeing that the portfolio is going into red? So with our kind of products, which give you a perfect assured kind of return of up to 12% and something bit more, even when, say, let's assume out of 100 rupees of the overall portfolio, you invest around 20-25 rupees in these kind of our kind of products, even if the markets were to tend volatile per se, during the bad times, our product gives you an overall return. The overall portfolio still looks healthy, which will basically make you that you are creating a value addition on the overall portfolio of your clients, right? So that is a great kind of value addition what you can create for your clients, because these kind of products are not something which you can go online, which you can go direct and then buy it and things like that. This has to go via a channel partner like you, otherwise the client would not even know that such an opportunity is available for his or her investment per se. Obviously, since we're talking of a higher return, these kind of products are inflation protected as well, because they tend to give you a very higher return. Now, let's also look at electric vehicle as an industry. Now, over the last 2 months or so, around 2 months or so, I've read a lot of reports on EV as an industry. And I'm sure many of you, if not all, would have read a lot of reports on EV as an industry per se. Now, so let me give you some data points when it comes to EV, and probably you may want to agree with some of the data points what we are talking about. So EV, when you talk about, there are three parts to the value chain per se. One is the battery, which is most important part apart from the engine or the motor per se of the car or the vehicle. The second is the vehicle production, which is basically the brand. It could be a Tata, or it could be a Mahindra, or it could be anyone else. Today, you have a Kia. You have a lot of people who have come into EV manufacturing per se. Now that is the manufacturer, and third is the charging infrastructure per se. And just a minute ago, I was talking of research reports which I read through on EV industry per se. And many of you would agree, when you read EV research reports, most of them are either talking of the OEMs or original equipment manufacturers like battery, engine components, tires and things like that. Or they talk of brands like what Tata is looking at, what Mahindra is looking at, what Kia is looking at, and so on and so forth. Very less number of reports actually come on the charging infrastructure. This is as good as saying that I have a fantastic vehicle which gives me a great mileage, but then I don't know if there are enough petrol bunks available for me, right? So that is something which is a major issue when it comes to EV, and probably one of the reasons why I love automobiles, and like probably most of you, one of the reasons why I have not ventured into electric vehicles is exactly for this charging infrastructure per se. The whole idea, and this basically is called range anxiety, which I'll come to it a bit later. But before that, if you look at the Indian EV market size per se, in the year 2024, Indian EV market is expected to be around 34 or 35 billion per se. And by 2030, end of 2030, we expect it to be around $110 billion with a growth rate of almost around 26%. Right? So that's the kind of growth what this industry is looking at, which means more number of cells, and which only means you need more number of charging points for people, to charge over a period of time whenever they are traveling, right? And this predominantly again is because of government's initiative for green energy, a lot of PLI schemes which are coming in, environmental, concerns, rising fuel costs for sure, and obviously the price of EV vehicles are coming down, and more so the technology is getting better and better on a daily basis. Earlier people were talking of only lithium ion batteries. Today people are talking of hydrogen cells as well, hydrogen fuel as an alternative also, where you'll be glad to know that the byproduct of this vehicle is just water vapor, which is great for the environment. It might increase humidity to a certain extent, but it's still okay, right? And this is predominantly because India has promised itself that it will be a carbon neutral by 2070 and will reduce its carbon footprint by 45% by 2030, which is 6 years down the lane per se. So that is something what this industry is looking at. You are looking at an enormous growth in sales, which only means as the sales of vehicles go up, you need more and more charging stations per se. And most of the research points, probably what you may have seen and what definitely I've read through, do not talk of charging points, available at all. And I will definitely show you some of the data points as to how many charging points we have. But before that, let us also look at something called the range anxiety. What I was talking about, one of the reasons why I have not probably bought a EV for myself. Now, range anxiety is basically that, if I need to travel, say, for around 400 or 500 kilometers per se, what if there are no charging hubs in between? Will my car go from point A to point B without a recharge in between, right? So that is something which is a range anxiety. It's like saying I'm going from, say, Mumbai to Pune, but then I'm not really sure if there are any petrol bunks in between, right? It's as simple as that. And it always creates an anxiety where people put off either buying the EV vehicle or taking that EV vehicle on a drive at all. And that is substantiated by the data which you can see on the right hand side. Globally, for every 6 cars, there are one charger which is available. But in India, for every 180 EV vehicles, there is only one charger which is available, which is very, very low by global standards, even as we speak. And some more points, which is there as a graph. In India, we are looking at, we currently have around 12,200 charging stations, where in China, as we speak, already has around close to around 3 million chargers, which is already set up per se, right? So the three things in the value chain, which is the OEM manufacturer, the brand per se, and the charger, is something which combined has to take this industry to the next level. Even if one of them falls off, the equation doesn't fit in, right? So you need a combination of all the three for this industry to actually do better. Now, the only solution is to have public charging hubs. Now, when you're talking of public charging hubs, there are different kinds of public chargers again. Now, few years ago, maybe half a decade ago or so, maybe a bit more, when all of us had mobile chargers, many of us, before going to office in the morning, as soon as we get up, used to plug our phones to the chargers, right? It used to take 2.5 hours. By the time we get ready, finish our breakfast, our phones would have been completely charged. But today is the zamana of fast charges, where the phones charge within half an hour, 40 minutes. I've even seen phones, going to around 80 to 90% in span of 10 to 15 minutes per se. Now that is the zamana of fast charges. Similarly for EV vehicles also. Now, the chargers, what we are talking about, or the company where we are raising money, we are talking about, is only putting fast chargers worth 60 kilowatt and above, right? So these are fast charging platforms where you can charge a vehicle from 0 to 100% in span of one hour or less than 1 hour per se. As you can see, every bay, every charging station will have 3 of these boxes, and every box will have 2 charging points, which means at one single point in time, you can charge up to 6 different vehicles at any given point, right? So that is something what this company is trying to do. So I'll also talk to you about the issuer over here. So the company's name, what we are talking about, where we are issuing, this NCD, the company's name is called Voltran. Voltran is, the industry itself is new, but then the company is, 8 months to 9 months old per se. And I'll also talk to you about why this is very important. We spoke about the super fast charging. The photos are actually live photos where they already have 4 or 5 chargers which are live up and running per se. Apart from what they've done, so this what they've also learned is when you charge your car for 1 hour per se, what is it that the passengers or the driver will do in the car, right? So you need a FNB, or you need a coffee day kind of a thing, or you need a lounge, you need a small restaurant per se. Now that is something which is also being developed over here. So basically this company is looking at two kinds of revenues over here. One is through the charges, the second is the FNB per se. And when I talk of gross revenue, 20% coming to our investors, I am including the revenue coming out of FNB as well as the charging unit per se. Right now, let's look at the promoters of this company. All the 3 promoters are engineers from BITS Pilani and University of Texas per se. They come with a great amount of pedigree, where they have already tied up with Tata EV, Fresh Bus, Neogo, and OHM already. And newer tie-ups are already on the way, which basically means a lot of tie-up only means a lot of people coming in over here to charge their vehicles and driving basically a higher revenue to the company per se. Now, this chargers can not only charge cars, it can also charge electric buses per se. Right now, let's look at what this company has already done and what it is planning to do. Now, the green ones, what you can see, the 4, the stops which are already there, or the hubs which are there, they're already existent for the last 6 to 8 months, and they're already fully operational. So the company already knows what exactly goes in terms of putting in these kind of charges, what are the costs, what are the revenues, what they are looking at. Now, the blue ones, what you see, almost 8 or 9 of them, is something what they plan to set up right now. And as you can see, they're all on the highways, closer to a larger city, but on the highway per se, so that there are more number of cars or vehicles which are coming in for charging at their hubs. Now, what this company also has done, I've done a study on the industry as well as this company per se. The average car utilization, as you can see, in the last 6 to 8 months has been 25% for this company, where the industry average is just 10%, almost around 15% difference between industry average and this company per se. So that's the kind of utilization what this company is looking at. That all comes from the location and how fast you can charge, which means more number of cars can come and charge during the day, or more number of vehicles can come and charge during the day. And the same thing is substantiated by the plug share reviews, where you see that the company is rated 10 on 10 in 2 locations and 8.4 on 10 in 1 location per se. And we are comparing with a large brand like Tata Power and GeoBP, right? Even with those kind of competition, the plug share review, or the customer satisfaction, what we are talking about, there are 10 on 10 on 2 different locations and 8.5 out of 10 in 1 single location, right? And I also put a Google review. Google review is something, we even review the restaurant where we want to, where we plan to take our family. Similarly, what we have taken, the Google review also, where it's ranked 4.7 out of 5, right? And there are a lot of customer reviews as well, which I would urge you to have a look at it at your free time per se. This is the existing revenue performance, and this is why we are comfortable that we can look at least 18% kind of a return for our investors per se, where we have done total modeling as to how many cars we are looking at on a monthly basis. Today we are looking at around, we spoke of a 25% utilization rate, but I have assumed only a 20% utilization rate. So when I do a risk analysis, I do analysis where what if the market does not grow, what if the demand does not grow, instead of 25% utilization, what if the utilization comes down to 20%, right? Now this 25 cars per day is talking of a 20% utilization per se, and with that utilization rate we are talking of a 18% return to our investors over the span of 36 to 39 months, right? And as I said, the last blue line you can see, it also includes the F&B and other accessories. Obviously, is something what we talk about when it comes to the revenue per se, which gets added to the investors. So with this, I end my presentation. Yeah, I probably ended in 35 minutes, and I'm willing to take any questions what you may have. Thank you for your patience, please.
Friend, just to add around to what Upendra said, I'll just brief it in within 5 minutes in a very short way. Friends, सबसे अच्छी बात क्या है कि this product is coming from a very renowned sector, EV, which even the government is focusing in a very strong way. Solar और EV, specifically जो short term budget आया था, उसमें भी there was many things which were talking about EV as a sector, which was talking about solar as a sector. Second important part about this is when we say as a product, it is talking about 12% as a assured, jabki, and that is the reason even we have pitched this product as a 12% product, whereas actually it is 12 plus 6. 18% is the average number what we are saying around a client should make around, where 12% is a assured debt and 6% is equity. But on the worst situation also we are saying it's a simple product where a investor is starting, जहाँ पे एक investor 2 लाख के product से invest कर रहा है, start कर रहा है, and he is getting around 12% yearly बोल सकते हैं, जहाँ पे 9% is coupon and he is getting monthly redemption, monthly returns of 1500 rupees to start around day one. So simple product coming from a very good segment called EV and coming from a renowned platform Asset Monk, which is again a tried and tested platform. When I talk about Asset Monk as a platform, almost 6-year-old platform, 300 crore plus AUM as on time, more than 30 products has been done, 6 to 7 exits been given, net NPA as on time is 0%. So we understand how the due diligence is happening and what kind of products we come in. Lastly, this product is live in the market, but we were still doing our own due diligence inside, understanding how this industry is growing. क्या हो रहा है इंडस्ट्री में, because there was many questions which I had for the team, and good part from the team was like every single question was answered. तो friends, बहुत अच्छा प्रोडक्ट है. Any छोटा बड़ा कोई भी क्वेश्चन है, please let us know. Upen, just a add-on question still, because prior to this I was speaking to someone. Still it came in because end of the day, sorry, still it came in like, still what is the risk? Because when I say 12% is assured, 18% is what we are talking, but still as we say, every product has its own risk. So what is the risk that you see, and what is the coverages thing when we say 1.5x as a collateral?
Right. See, in most or all of my NCDs, we understand the risk and we try and ring fence. Now, in any of the NCDs, whether be it listed or unlisted, whether it is secured or unsecured, the only risk here is the risk on either the coupon or, in terms of the payment, or at the, in terms of the principal person. That is the only risk which is there, because this is basically a financial product like an NCD. Now, what happens if it is a listed product, or which is a rated product, like say a triple A, A1, or whatever as the case may be, the ratings can change overnight, and we have seen this many times in the past, specifically in 2018 and again in 2013 when countries rating changed overnight per se, right? Because of taper tantrum and stuff like that. And these are unsecured. As soon as the rating changes, the whole risk matrices changes. The only difference over here is this is unrated, but it is secured. Again, as I said, the only risk over here is either be it a coupon default or the principal default person. Now, what we have tried to ring fence is 1.5 times the security, right? So, which means that the security is taken and it is mortgaged to IDBI trustee. It is not even with me. So, when I say risk, I don't only look at risk of Voltran. I even look at risk of asset mom. Agar kal Upendra is not around, right? Or the company is not around. What happens to my investors, right? So that is where it is given to a trustee, which is a SEBI licensed trustee, like a brand like IDBI per se. And I'm very sure none of us require a description of the strength of IDBI, and that is where it is mortgaged to, so that no one will be able to arm twist a guy like IDBI, right? So again, coming back to your to answer your question, what is the risk? The default of coupon. Usme kya hoga? IDBI will going to sell or go to auction the security per se, which might take 2 to 3 months. Which means just in case there is a default, you might not see returns over. You might not see returns over next 2 to 3 months, but you will get your principal along with a part of your coupon. So the only risk is the time frame per se. अगर डिफॉल्ट हो गया तो 3-4 महीने में पैसा आ जाएगा, बट वो 3-4 महीने वेट करना पड़ेगा.
Got it. You got it. Fair enough.
And this is not just for this product, across all my NCDs person. That is how I ring fence it, and that is how I give it to IDBI as a trust.
Got it. Got it.
And see, even from a borrower per se, if you see, and one of the reasons why I take real assets as security is typically in a real asset, the value goes up on a yearly basis, right? My Hindi is bad, please pardon me. Today has given 1.5 times security, and by next year, this 1.5 times has become 1.7 times or 1.8 times or 2 times. We will not give back the security, saying that security jada ho gaya hai karke. We will still keep it. Agar the value comes down, he has to give us additional security per se. And think from a developer angle, if he has given a piece of real estate, which he also knows the value goes up on a daily basis, and this tranche size is around 3.6 crores per se, it's not a very large tranche. 3.6 crores ke liye, will he lose, say, a 6 crore worth real estate, which again is growing on a day-to-day basis? Financially, it does not make sense for him at all, unless his business shuts down for whatever, the COVID ho gaya, something like that happens, which is totally unforeseen. Then again the risk is ring-fenced. Otherwise, it is something which you may want to look at it more like a well-rated bond person.
Got it. Got it. Fair enough, because this is something that each one has a question around when we talk. But friends, एक चीज what again I will vouch and on this part what Upen said, when we say it's a unlisted thing, but we have to understand it's a secured NCD which is backed by a real estate collateral. And why real estate collateral specifically? We say it very strongly because real estate is something which is measurable, and measurable which everyone can go online. इतने सारे platforms है, इतने सारे local brokers है, so we understand. It's like even if I'm sitting in Mumbai, I have to know a property का value Delhi में क्या है, या गुड़गांव में क्या है, या जम्मू में क्या है. I can know it immediately in maximum 30 minutes या 1 घंटा. कुछ नहीं तो 4 मेरे को सामने से local brokers का call आ जाएगा to explain me the entire market. So even that is the reason why we take real estate. But fair enough. So lastly,
and we have all the valuation certificates also, which are done by RERA approved valuators. तो इसका जो 1.5 times security मैं बोल रहा हूँ, Ankesh and team has the valuation certificates already. So it is not that I'm just saying 1.5 times going by market. A RERA approved valuator has gone and then valued at that run.
Fair enough. Fair enough. Super. Thanks again, Upen. Thanks for the time. I believe many of the questions, many of the things have been taken up. And majorly, again, I would say a very good product and a beautifully designed product. In fact, I would say that way. कि छोटा tranche है 3.5 crore का tranche है as Upen said, with a minimum ticket size of 2 lakhs, and I believe roughly next 15-20 odd days it should get closed enough, right? उससे मैं भी ज़्यादा बोल रहा हूँ मैं, उससे पहले close होना चाहिए. But again, as I say, guys, we are starting a fresh product. So in fact, 28 today being 28, still thanks again everybody joining in. But again, I can say this is the first product that we are launching for this upcoming financial year. Adding to the call, one more thing, FundBezzie, we have launched our app as well, as we stated in our last call webinar, that we are coming up with a learning series app. So FundBezzie app is live on Android phones. Currently, we are not on iOS, so we can download FundBezzie app on Android. It is basically a learning app where you would be learning all the alternative segments, alternative products, starting from a fractional real estate to a secured NCD, whatever new things coming about, that is what we are coming at FundBezzie as the app as well. Yeah, there is, what if one want to exit within 2 years? There is a question.
Sorry?
Upen, there is a question which has come from Saeed. What if somebody want to exit in a year or 2 year in between?
Right. Great question. Thank you, Saiji, for this question. Since these are unlisted shares, they are not as liquid as your tradable shares or listed bonds per se. So we request all our clients to look at the whole term, which is 36 plus 39 months, or any product what we do it. But however, and that is where I said you may want to look at investing 20-25% of your overall portfolio in these kind of products, कि अगर कल कुछ emergency आ गया, you can remove from other product, जैसे equity हो, bond हो, FD हो, वहां से आप निकाल सकते हो, because these are not very liquid per se. But having said that, what can be done if there is an emergency, that you either, this basically, since it's an NCD, it has to be replaced by one more client. Now, say for example, Upendra has bought it, there is an emergency and kuch aur nahi hai, and this is the only fallback for me. I know Sitlaji, I go and tell him that why don't you buy this bond from me and give the money to me. So that is one option which can be done. Or let's assume I don't know Sitlaji, I go back to Asset Monk and say that I want to liquidate this, please find me a replacing client. Then we will talk to our existing clients per se, find a match and then do it. But again, as I'm telling you, this is not really liquid. This might take a process of 2.5 to 3 months per se to find a new clients for replacing the NCD.
See, there is one more thing, because हम लोग secondary बोलते हैं ना specifically इसमें, तो one thing we have to understand कि अगर emergency है तो मैं क्या price पे exit, because secondary हमेशा distress के साथ होता है, because सामने अगर entry भी कर रहा है तो we have to understand कि he will try to get the maximum profit starting में. तो if I'm saying it's a 12% और कुछ emergency है, तो ideally if I am an advisor, तो I will say कि sir, this product as an investor, if you are investing, you should look for the entire 36-39 months. But I'm not saying कोई भी product lock-in के साथ नहीं होता है, but if there is an emergency तो वो discounting के लिए आपको ready रहना चाहिए, and that is applicable even for any NCDs, because secondary में आप जब जाते हो, because that is some kind of emergency. Even अगर मैं FD, जैसे मैंने FD अगर 400 days के लिए बुक किया है at 6% या 7%, कोई इमरजेंसी में अगर मैंने 6 months में भी ब्रेक किया तो वहां पे तो मेरा पेनल्टी क्लॉज भी आता है, मेरा रेट भी नीचे जाता है. तो सेम थिंग, इट्स सेकेंडरी डिस्ट्रेस, व्हाट वी अंडरस्टैंड. बस ग्रेजुअली ऐसा है कि एफडी एज अ मैकेनिज्म वी आर ओके. यहाँ पे वी सेड कि सर यहाँ पे आपको सेकेंडरी में देयर वुड बी हेल्प ऑलवेज, बस इमीडिएट लिक्विडिटी शायद से नहीं होगा. यू हैव टू गिव मी एटलीस्ट 60 to 90 days.
Exactly.
Friends, any question? Any more question? ठीक है, डन है ओपन. And thanks everybody again. We will be sharing the product note. This product is already live on our platform. FundBezzie पे live है. Product note already है वहाँ पे. It's a single one page of product note to make you explain the entire product. Plus product का video on है. Anything, any queries, me and the entire team is always there. You have the credentials, you have the details. कुछ भी लग रहा है, please let us know.